It is official. Trump is back into the White House. The question on every investor's mind now is what is next for the stock market? Are we looking at a repeat of the rally we saw at his first term, or could we be facing a very different economic landscape this time around? In today's video, we'll break down the potential impact of Trump's policies on the market, explore key sectors that may be affected, and discuss how you can make smart investment decisions without getting swayed by the media noise. Let's dive in. Following Trump's re-election, US markets have reacted strongly, with stocks hitting record highs on Wall Street and the dollar posting its biggest gain in 8 years. Major US indexes surge, with banks leading the charge, all driven by the optimism about Trump's tax-cutting and tariff-raising plans. Investors expect these policies could push up inflation, promoting a slower pace of interest rate cuts and ultimately providing a better return for dollar-based assets. Cryptocurrencies also rallied, with Bitcoin reaching an all-time high. Trump's pro-crypto stance contrasts with the previous administration's regulatory approach. This has fueled excitement in the crypto markets. Additionally, the announcement that Elon Musk might help audit the government spending further added market confidence, boosting Tesla shares by over 14%. Globally, however, the reaction was mixed. The dollar rose significantly against other currencies, with the pound and euro dropping to their lowest levels in months. Asian markets saw gains, while the European and Chinese markets were down, which basically reflects caution around Trump's protectionist trade policies. US bond yields have also spiked, suggesting that investors expect government borrowing to increase, which may eventually affect interest rate expansions from the Federal Reserve. These shifts reflect both enthusiasm and the risk investors foresee under Trump's continued leadership. So what can we expect when Trump returns to the White House? To understand this, it helps to look back at his first term and how the markets responded to his policies. Between 2017 and early 2020, we saw a market rally, driven in large part by policies that were friendly to businesses. Trump's corporate tax cuts boosted profits across multiple sectors. Deregulation supported industries like energy and finance, and he also brought a strong stance on trade, especially with China. Now, let us consider what a second term could mean. If Trump were to introduce similar policies, we might see support for domestic manufacturing and energy again, potentially benefiting the sectors that are relying on less regulation. And if he maintains a tough stance on trade with China, we could see tariffs or other trade measures affecting their markets. While that could provide a short-term boost to some US businesses, it also comes with risks. Higher tariffs generally mean higher costs, which can eventually trickle down to consumers and increase inflation. One major question mark, though, is the Federal Reserve. During his first term, Trump was often critical of the Fed, especially when they were raising interest rates. If he takes office again, we might see tension with the Fed over the rate policies, especially if he would be pushing for lower rates to stimulate the economy. However, we have to remember that the Fed operates independently, so even the president doesn't have full control over the monetary policy. In summary, a Trump's presidency could offer some immediate policy changes that might favor some specific sectors. But as we've seen before, these policies come with potential upsides and downsides. Naturally, not every industry will benefit from this. Alright, with all this in mind, the real question for you as an investor is, should you be making big moves in anticipation of Trump's second term? The quick answer to this is probably not. And here is why. The long-term investors know that real lasting growth doesn't come from reacting to headlines or short-term political changes. I know I say it often, but it comes from sticking to the fundamentals. Investing in companies with strong business models, solid financials, and a clear vision for sustainable growth. While the media might spotlight each tweet or a policy announcement, remember that these things rarely change the true value of a well-run company. So rather than reacting to day-to-day news, focus on the long term. If you're investing to quality companies, those investments should withstand political shifts, especially when it comes to sectors like healthcare, tech, and consumer goods. In these sectors, the fundamentals play a bigger role than the policy shifts. And if you're feeling the itch to react, my best suggestion for you would be take a deep breath. Historically, the stock market has weathered all kinds of political transitions. Smart investing isn't about timing the shifts. It is about staying committed to a strategy that fits your goals. At the end of the day, if you're a value investor, you have to buy companies that are undervalued compared to their intrinsic value. So, to recap all of this, when Trump does return to the White House, we might see some policy changes that might create some short-term waves. They can be both positive and negative across different sectors. Some industries might benefit from his pro-business stance, but other factors like trade policies and the national debt could add a layer of risk. As investors, the best approach is to stay steady, stick to the fundamentals, and avoid the urge to chase trends or market hype. Remember, true value comes from the company's ability to perform over the long run, not from the policies of the moment. But how are you all reacting to this news? Do you see Trump's re-election as a positive for the financial markets? Or maybe you think that Trump is going to cause a market crash? I am really curious to hear your thoughts. Are you doing adjustments to your portfolio? Please comment down below. And as always, if you enjoyed the video, please like it, consider subscribing as it helps to grow my channel. Thank you, and I hope to see you in the next one. Bye.